Hi, Patrick, Chantel, Hasselhoff. Let's get this show on the road, Warriors. What do you think?
The broadcast is now starting. All attendees are in listen-only mode.
How's everyone doing today? Turnaround Tuesday. Let's have a great day. Before we get started, I had some great looks. We're going to have Chris Bear on today. Brazil 61. He's going to want to discuss this today, Euro Yen monthly. I had some real nice looks on people that are confused about Aussie Kiwi. Here's one. The weekly. Max is looking for about 104.30. So there's quite a discussion of Aussie Kiwi on my Twitter stream. If you're not on it, my handle's @ForexStopHunter. Dan Norberg, and if he's here a lot, he's a great technician. He posts in my stream showing a CAD Yen breakout. Nice look, Dan. Just want to show you a few more looks in the Aussie Kiwi. Here's a look from Hardy, kind of a follow through. If we break this line, this is kind of what Naned Kirkez said. He needs a line to break to eat into the gap, so we're sitting right here on the line. Maybe we get one more pop here. That's Euro 4 hour. So I just want to show you that there's Brazil. Chris is excited to be here. Hardy still agrees with Canada. I think we could rally one more time. I'll break it down in a minute. Looking for about 35.30 in Canada. My Twitter stream, me, is just chock full of great ideas every day. Here's Hardianto's level for Aussie Kiwi, and I know a lot of people are looking at it. So he's good. He's calling this whole thing a 2, and it looks like 2 could come in there around 104.60, then a big rally. How you doing, Tosin, Ronit, LaShawn, Patrick? Everyone doing okay? So here's my favorite Turnaround Tuesday candidate. It's the pound Aussie, the beast. Armand. Shorter term, we had a throw over here on the wedge line. Now we're back underneath it. I think you could have a piece on between here and 620. You got to risk an average trading range. I think you have to risk 150 pips on a trade like this. Hey, Ron, how are you, brother? You feeling better? Feeling better? Wait till you see what we have here. Hold on a second, Hasselhoff. Hold on. Give me a minute to talk. So anyway, this is the 15-minute chart. So we had a throw over, we're back underneath it. Here's a little bit more of a macro view. I'll start from short term, go long term. Here's the hourly. So we could try one more high. This was a pretty high reading up here at 73, but it's a beast. Maybe it's going to trade 650, make a new high. But I think the possibility, the fact that it broke outside the wedge line and had a throw over, and now is back inside the wedge line, is a bit of a market message. And even though the RSI readings are pretty stiff, the form is pretty classic. Here's 1, here's 2, and this could end up being 3. The other way to play it, if you want to be conservative, is just short it under this spike low, about 5.5, 540. Today's low, it takes it out. I think we're going to test this wedge line, and I wouldn't be surprised if we see, I'm going to ask Steve Volge about it now, but, what's wrong with 50% pullback towards, 38, 69.5 to 7.5. I have it anchored all the way down here at 61.8. So that, you guys are having a sound problem? Mario, everyone can hear me. Give me a Y if you guys could hear me. Yeah, I know. Okay. I didn't say that it was going to be easy. It's a turnaround Tuesday, classic day for it to make a turn. No guarantees. I'm wrong a lot, guys. How many people out there have seen me be wrong a lot? And right a lot. So, yeah. Hey, Patrick. Oh, come on, Robert. I am. Anyway, trend followers would say, Dale, you're crazy. Just an idea among many other great ones that are going to happen during the day today. I'm just curious, anyone out there love face? You can count? Get your calculator, Ziggy, my brother. Patrick loves face. I almost said LAR. We all love face. How about my face? I shaved yesterday. How about my face? Everyone ready? Everyone ready to battle Pound Aussie today? Huh? You got to be tough in this business, man. You know, you throw a few jabs, you know. You might take a hit. Oh, I got stopped out. Next. That's all I could say. If you get stopped out, the right word to use is next. Next. Tom Brady throws an interception. You think he comes back to the huddle and goes, oh, guys, I'm so sorry. I made a mistake. I got picked off. I don't know if I could play quarterback anymore. Okay. So I'm going to bring in the crew. I think we have some of the crew in here. We have Chris Bear, Brazil. Blake's in the house. Steve's in the house. Stelios is in the house. So, ForexAnalytix team members.
Hey, Dale.
Hey, Blake. How are you, bro? Good, man.
Good. I'm just
You don't want to you never want to get into the ring with me, do you, Blake?
Never.
Did you see the speed? I still have hand speed, man.
No, I didn't see the speed, but I'm sure you got it.
What's on the radar, Blake?
He definitely has you on the morning sexy voice, Dale. Sorry to tell you that. That competition is already lost for you.
Why? Blake?
Oh no. Did you hear Steve?
No.
Oh, he was saying that I've got you on the morning sexy voice sound.
Yeah. That's okay.
You know, first of all,
I'm not jealous.
The big move overnight has been the dollar yen. The dollar yen has been the breakout, channel breakout. Nick and Steve, everybody thinks that I'll go ahead and take over here.
I know, Blake, you know, I they were right. I wanted to see a couple closes over 13. Boy, did we have them.
Yeah, we closed above 13. We closed above there. It's not a false breakout. It is breaking higher right now. So the only thing that you've got to be watching right now if you're playing the dollar yen to the long side is you got to be watching equities and you got to be watching bonds too, because bonds are weak, and bonds like the 10-year, you can see right here, here's like the 10-year. So the 10-year is weakening, and we're trying to break down. So as long as that breakdown continues,
right,
then that's good for the dollar yen. That's going to keep the dollar yen bid. But the flip side is that you watch equities. You know, this 2400 level in the equity market. So let's go over to the S&P here.
Yeah, they're not making a lot of hay out of a strong U.S. dollar yen and a weak bond market.
Exactly. So we've got to be real careful, because if the stock market starts to show some weakness, that could reverse the dollar yen. But the dollar yen has a long way to come if it's going to go down, to actually show any type of reversal. You know, the dollar yen would have to come all the way down to like 113, probably like 113.50, 113.30, which is 70 some odd pips away to actually even show any type of reversal. But that's something that, that's something I think we got to watch equities, just because of the false breakout that we had on, well, potentially false breakout that we saw on Sunday night. You know, so equities are still holding up well. But I think the big catalyst for the dollar yen is going to be the bond market. One other comment about the bond market is, you know, like the guys in our office are talking about, you know, the 10-year being at an important support, and then also Art Cashin on CNBC who was saying that the 10-year is also, this is really a key level today. So I think we've got to just keep an eye on bonds before you get too carried away with the dollar yen. Just keep a very close eye on what's happening in the bond market, because that's going to be the tell. Now, like if you look at the euro
We're
dollar,
also 78.6 back, like
on the dollar yen.
yeah.
Yeah, we're slightly above it right now. The 78% retracement on the dollar yen came in, and this is, I'll go back to the dollar yen really quick. The 78% retracement here is at 113.90. That's this move from the peak in March. But if you go to the highs from December, we still have, and this is where Nick, chatting with her this morning, Steve Volge was also talking about. There's the 618 and 161% extension of this move. That all comes in, and then also an 88% retracement too. See, this is the 618. It all comes in around 114.60. So this seems like a very viable target for the dollar yen. But like I said, what could actually stop the dollar yen in its tracks is you have to watch the bond market today. I think the bond market is going to be critical. It's Tuesday. Yesterday, you know, the Dow, I mean, was up slightly. The Dow was up slightly. The stock market, you could say, was really pretty well bid. Even though the S&P was down a little bit, it was still pretty well bid. Today, you know, being Tuesday, equities are starting to show just a little bit of weakness here ahead of the open. We just got to watch how they play out, because it's going to be real critical to what happens with the dollar yen at this stage. And you got the euro yen back above 124 here. You got the pound yen, which is just continues to blast higher in what could be an ascending wedge, but still very strong. You got other yen pairs like the Aussie yen, the New Zealand yen, that aren't really going anywhere. Considering, you know, how bullish the stock market has been. So I think it's going to be important to watch those. I wanted to talk just a little bit about the euro dollar. The euro dollar has come back down to some horizontal support here. And this is like the support zone. I mean, if you look at the euro dollar, this is a big zone that I've had on my charts for the last several months.
Nice look, Blake.
Well, yeah, I mean, it's just, we're there. We're in the quote unquote support zone. So you got to be real careful being too aggressively short while we're around the 108.50. You know, right now we set a low at 108.70, and we're just kind of holding these prices. So
if we got to pop back to 109.50, would you try the short side?
I don't know what to do with the euro right now. The euro is kind of like, yeah, I mean, I'm not comfortable with the euro dollar where it sits. I think there's a lot of cross currents with the pair. So I'm not really too sure how to play the euro at this point. I don't know if it's necessarily the best play out there. I look at the pound dollar. The pound still looks pretty constructive. And here we're pausing on support here. So that doesn't look too bad. But, as far as the euro goes, I'm just really not too sure. And I look around and at like the I look at the Swedish krona, and I look at the Norwegian krona, and they're really just kind of range bound. So I'm just not overly excited about any one of those at this point. And I guess another thing that we should note is that precious metals have had the snot beat out of them. You can see, like, here's gold. Gold's back down towards the lows that we're at. This is yesterday. We're back here testing these lows. Silver's lower, but it's showing a little bit of a bid. So
it's showing a little bit of divergence too for the first time.
Yeah, it is. And you see the 4 hours showing some divergence there. You're right. And the thing is if these precious metals start to bounce, what happens to the euro? Does the euro bounce as well? So I don't know. I'm kind of, like I said, I'm not really super motivated right now about and convinced about what I should be doing with the euro dollar. I think right now the story is in the bond market and the yen, and so we've just got to continue to keep our eyes on those really quick, or for now. Excuse me. Are you still there?
Breaker?
Yeah. Yep. Hey, Steve.
Hey, I just want to say that I totally agree with you on the fact that I think that there are better opportunities than the Euro USD at the moment. I mean, the chances are, quite split, and it might actually go higher from here. But I think that since a long time ago, it's not in a rush to go anywhere fast.
Volume up, please, Steve.
Oh, is it better now?
A little.
Okay. Sorry, I have no idea what the problem is. I'll try to speak louder. So I was saying that I think that the Euro USD is not in a rush to go anywhere fast. So there are definitely better opportunities out there. I'm 100% with you there.
Yeah, I really am not. I'm not really too sure. And Steve, are you looking at any of the cross rates? Because I haven't really been paying too close of attention. And I know you were looking at some of the euro crosses. Because I'm gonna sign out till Chris Baer comes in, and then I'm gonna come back on. I'd like to say hi. Well, no, I'd like to say hi to him in person when he's on.
Oh, okay. Yeah. Chris is a fan of yours.
Well, we haven't. I've known Chris for many years, and so I haven't had an opportunity to talk to him for a while. So I'm gonna log out here in a second and log back in, and sign back in when he's on. But I wanted to see if Steve, you looking at any of those cross rates?
Yes, but before we look any of the cross rates, I think there is something considerable to look at here, Blake, and I think the most interesting pair at the moment having to do with the euro complex, which is not a euro pair actually, but we know very well how much correlated it is. It is the USD CHF, and I think it's a big part due to the movement we've started finally having in Euro Swiss. So I don't know. Do you want to pull it? Do you want to pull a chart?
Why don't you take over here?
Yeah.
Sure.
And I'll let you guys look at that.
And give me your feedback, Blake. Okay, can you see this? Can you see my screen now?
Got it, Steve.
Okay, just have a look at this. Actually, we had
French elections, yes.
Yeah, actually, we had an amazing snapback here, amazing, from a very critical level. I mean, I had two support zones I was looking at here, two possible triangles. One of them is very long term. This trend line goes all the way. If you zoom out, it passes through very important bottoms since literally years ago. And it was passing from here, and the other one is a more short term. I decided to ignore the week we had during the election days and only count the rest, because sometimes daily weeks like that can really mess up with the technical analysis. And we actually had the confluence of the horizontal support zone and this triangle trend line, which we held.
And it really didn't get smashed the way it should have, Steve, when the euro gapped after the election, did it? It kind of held up pretty well.
You know why? Because we had, look at this, and this is something very important. I know that the vast majority of people have completely stopped looking at this pair, but I haven't. And this is Euro Swiss.
Yeah.
Look at it. Finally, it seems like it wants to make an important move out of a channel it has been respecting since 2015, actually. And this is going to be a big bullish break. And if that happens, as you understand, it means that if you want to be short the Euro USD, taking into account the possible move that we're seeing in Euro Swiss, you might better play this pair, because we are soon likely to have a breakout, and that's going to be an important breakout. And just to put things in context here, having to do with the USD CHF, we had a triangle, a breakout, a channel that retested the broken triangle support plenty of times, that created its own triangle, another break higher, and that created again another triangle. I mean, if you look at it, it's extremely interesting from a technical standpoint.
You know, you're one of the hardest working technicians I've ever met.
I don't know if that's a good thing, but
well, your wife, your family probably doesn't think so, but the people that trade with you do.
Oh, you know
they
something.
Appreciate it.
On that aspect, I'm extremely lucky because my wife works very long hours as well. She's a lawyer.
Oh, okay. Well, I'm glad there's harmony.
Yeah, there is. Actually, there is. So, you know, she can't really complain. So yes, in my opinion, if you want to be involved, this is the pair you'd rather do it, and not the Euro USD. Now, having to do with cross rates that Blake asked, we have the Euro Pound. We've talked about it so many times, the possibility of a head and shoulders. It doesn't look like it wants to go anywhere really fast. But I maintain a bearish bias on the medium to long term here. But lately it has been very quiet. I mean, if you have capital invested there, you start thinking like, you know, there is some opportunity cost. I mean, there is not anything much. I mean, it's not that you're paying any real rollovers or whatever, but you know, there is an opportunity.
Where would you not just run out of patience, but say, you know what, it's time to get out of the way. This right shoulder is taking too long to develop.
It's close to getting there.
The whole world is waiting for a breakdown of a head and shoulders top.
Yeah, I have to tell you that I've already started having those kind of thoughts already, and that's not a good sign. So I've already started considering the possibility. That's why I'm monitoring closely. I have a position since a long time ago, and it's decently, more than decently in the money.
Because you know what haunts me? You know what haunts me about this, Steve? You see the high there at 92? You see the RSI reading?
Yes.
There was no divergence off that high. That was a confirmed high. And if you look at it long term, it's really just kind of could have just been a correction, and that may not even be complete.
I agree with you. That's
the most contrarian trade would be to look for new highs over 92 in Euro Pound.
I agree with you, and that's one of the reasons, if you see, that I have labeled the possibility of a move lower already since a long time ago, because, you know, I like to follow what Gregor keeps saying over and over and over again, which is that you should always, I mean, you should have a count, but you should also have always like minimum expectations to begin with. So a minimum expectation on such a move higher, which was clearly impulsive, would be an A, B, C. But as you very well said, the C can end up being more a wave
extension of A.
Exactly, or we might have a more complicated, you know, correction. So, you know, the more time it takes for us to decisively break lower from this 83.30 roughly, the more I start getting worried. So if I see something impulsive on the upside, I might actually take profits and bail out.
Yeah, you know, I was taught, you know, that lately it's been like watching paint dry. But I've been taught, never sell a sleeping market. You ever hear that?
True.
So, you know, to me, it's like paint dry. It'll probably break down now, but I'm just saying that.
Actually, now that you're talking about sleepy markets, This has to do obviously because, you know, volatility, as obviously everybody that is hearing this, volatility is almost always lower when you have a move higher. That goes in equities mostly, of course, because FX is more of a binary thing. But while equities have always a bullish bias for obvious macroeconomic reasons as well, I mean, on the long term. So volatility.
Anyway, that confirmed high at 92 has been bothering me for a while. I've been advising on both sides, but you know, every time I pull up that chart, I see that and I go, why do I continue to have the bias to want to short it?
Yes, because it's human nature. That's why. I mean,
wow.
we are wired like that. This is one of the human flaws that we have, and you know, it's extremely hard. I think nobody can achieve it at 100% of the time, even the best traders. It's one of the human flaws that when you see something being higher, you think that it's expensive and you should sell it, and when you see something being you know, significantly lower, you feel that this is an opportunity to be a buyer. I've also seen that happen several times, not only as you know, from my experience as a trader, but being through a financial crisis in Greece as well. You see it very often happening in the mentality of people with real estate and any kind of asset as well. I mean, you can't imagine how many times I've tried changing the mind of people that, you know, after the real estate went down 25-30%, everybody was trying to tell me that's a great opportunity to buy, you know, houses here and apartments and everything else. And I was telling them that you have absolutely no reason to believe that the bottom is in. We most likely are going to move twice as much. And everybody that was not involved as a job with finance, actually even a friend of mine that is working in a bank, they could not understand that. I mean, it was completely against their nature, and I was telling them that this is not an opportunity to spend your capital. You'll be able to buy cheaper, and even if I'm wrong, you can always lose 10%, 15% of the absolute low to have confirmation, because we're talking about your capital, instead of doing the opposite, risking, let's say.
Well, maybe they lived on the east or west coast in the U.S. because, you know, we've surpassed the 08 highs here in real estate values.
Yeah, I know that.
So, I mean, you know, if you bought a 30% discount, and I didn't like where I bought it. It was too hot out there. But, yeah, I mean, people, you can't convince anyone here that 08 could ever happen again in real estate values.
Yeah, you know, and that's very dangerous, as you always know, because you know, the first element needed is complacency, right?
You know, you think about what happened here, Steve. I know it's not FX, but this is what happened. We had a financial crisis. Middle-class people lost their homes. Hedge funds bought them up, created a yield product, became the landlord of the person who lost the house, and they're paying more for rent than what their mortgage payment was. Therefore, angry Americans, and that's why we have, in my opinion, some of the vitriolic, angry rhetoric has appeal, nationalistic appeal, because people are angry. That's what happened to a lot of people here in the U.S. So, and you've seen it in Greece. So, and you really haven't had the recovery we had.
No. And to be honest, globally, the lower and middle classes are, you know, are squeezed globally.
Decimated.
Yeah. And the situation is not good. And I think that.
Well, they ought to pony up some cash and try and top pick pound Aussie. What do you think?
I'm waiting for that trigger yet. You remember what I just told you? I told you that I'd rather lose a small percentage of the move, you know, and have confirmation. Now, having to talk with complacency, because we were talking about it just before. I was speaking with Stelios before the webinar about an hour ago, because we had some company issues to arrange. But you know, then the conversation turned to the markets, of course, as we often do. And we were having a look at the VIX, which is currently, as you see, at 9.6. So we went back in time 25 years.
Yeah.
And the only two incidents that we found a lower VIX was in December 2006 and December 1993, and we didn't even go further back. So perhaps the third incident, we might even have to go another 10 years back.
I don't think they had the VIX beyond that.
They have. I'll show you. You see, they've obviously. No. Look closer.
Oh, I see.
Do you see it? It's not continuous, but you have it.
Weird.
So, question. Currently, let's pull out the DSI and have a look. Actually, I can tell you as a fact that the DSI for VIX is currently at 11. 11 is one of the smallest readings I've ever seen. I mean, only
talk about record short positions by hedge funds in VIX derivatives for months now. Record short.
Yes, and we had.
They're still making money. They're still making money.
Ah, there it is. I found it. So we currently have a DSI of 11 for VIX. Okay, and Nasdaq 80, etc., etc., etc. I can't say that the DSI for the stock indices is extreme. It's very high, but not extreme. But you know, given the fact that we have nothing we know of coming as an event risk ahead of us, and being at a reading that we have only seen twice during the past 25 years, and being so overbought as we are, I mean.
So are you buying UVXY?
No, but okay. I'm really
because they are deteriorating assets. They have a decay in them.
Yes, it can chop you up. I mean, that's what we were talking with Stelios to establish a VIX position, but we'll see what we're going to do. Personally, I'd rather keep monitoring Nasdaq, for example, which I think is the instrument that will snap back, in the most impressive way when we actually get a reversal. And I'm still waiting for a trigger. But honestly, with these kind of readings, things are very dangerous if you're bullish. I'm not calling it open the market.
Did you watch Anthony Allen's counts yesterday?
No, I didn't.
Okay. I mean, he's got targets of like 4,000 in the NASDAQ.
I for sure can tell you that we are much closer than people think to at least a decent correction, because this situation is completely unsustainable. Completely unsustainable. I don't know what the
maybe they just look. Everyone who's knows this expression "sell in May and go away." They make those people look like jerks until Memorial Day, and then we have a June swoon. But May wasn't the month to start it, So then the people will say, "Oh, May, see, all the bears said sell in May and go away, and look, the market's up in May." Yeah,
although I pay a lot of attention. I pay a lot of attention to seasonality, having to do with what? Tops and bottoms being at the start of a period of a semester or a quarter or the start of the week or whatever. I don't pay much attention to seasonality that have to do with stocks or whatever, because as you understand, statistically, you cannot trade by that. I consider it more important in things like some commodities, because seasonality there might be a product of actual market conditions that fluctuate demand and supply. You know what I mean? While in the stock markets, I can't say that you have actually macroeconomic conditions that make it a better opportunity to sell in May or sell in September or whatever else. So to be honest, I don't give much value.
Sell in May on my birthday, May 27th.
Okay, I'll mark it down. By the way, somebody asked before about Aussie USD, and I'll say something that, we're very lucky that, when we're trading from a technical perspective, because I don't consider myself only a technical trader.
Yeah, someone's making a very impassioned request for you to look at the Russell, since you were talking about equities.
Okay.
And I think the Russell 2000, if you have it.
Give me a ticker, please. I don't think I've done analysis to it.
Oh, okay.
Give me a ticket and I'll pull it up during the break and I'll show it to you afterwards.
Okay, what's a symbol, Ronan?
I mean, just give me your preferred, because I know that most of those products are tracked by more than one tickers.
IWM is the ETF. Thank you, Brian.
Okay.
And then RUT is the Russell.
Okay, so let's have, I might have some older time analysis here.
There you go.
No, I don't actually. Okay,
That's
I promise.
That's the ETF.
Okay, I promise I'll have something ready for you tomorrow, Nate. I already
Look
see
at that
quite a
3
lot.
drive to a top formation there.
Actually, we have huge divergence. That's true.
Look at that 3rd drive. Wow. Now,
Yeah,
you
okay.
know what? Sometimes in a 3rd drive, Steve, you end up with 3 on the 3rd. It's a fractal of the formation. So we could have another probe or 2 and diverge on the 3 on the 3rd drive and end up with 3 drives there.
I can tell you very fast, but I'll show you analysis tomorrow on it, but I can tell you very fast that this was probably a triangle, and in my opinion, you know, as long as we are, especially, for example, now we're only having a very short-term look at it, but for example, oops, mistake.
So aren't triangles 4 and then the thrust out of it's a terminal thrust?
For example, as long as we stay, you know, above here, there is nothing bearish to it. I do see the divergence here, and it's, you know, it's quite strong, and it does look less bullish, obviously, than the Nasdaq or the S&P, but I don't think we have any kind of a breakdown here, anything to talk about. But I'll do more analysis, and I'll show you tomorrow. But let's go to the Aussie, because a friend asked about the Aussie.
Steve, can I say one thing before you move to the Aussie?
Of course.
Sorry to interrupt. Just wanted to say something on volatility in VIX that we were talking about, and UVXY that Dale mentioned. The thing to remember is that instruments like UVXY, which has very bad carry, you have to get the timing exactly right. So the good thing is, like Dale said, the banks have been making money being short vol for years now, since 2009. So when this thing starts turning, they're going to have to cover, they're going to have to basically get out of the trades. So you don't need to get the timing right. If you wait and you're patient and you miss the first little bit of the move, you can get the, you know, you can get the rest of that. I am looking at UVXY, but I'm not hitting, you know, pulling the trigger, not even close until we see, you know, a decent move, a decent turnaround, and then you get in. That, I mean, that's my
Great advice. Yeah, because it's like buying premium. There's decay. It's like buying an option.
Yes.
Did you guys ever hear my expression of how I defined options when I was a young man in the business?
No, I've never heard that. Go on.
All right, I think you'll like it, Stelios. Options are like relationships. 90% of them expire worthless.
That's good. Mine at 90%.
but you know, look, I'm here with the 10%. So it doesn't mean that you stop hunting because most of them expire worthless, because if you have a handful of friends in life, that's priceless. So
that's
actually
wise words.
But anyway,
actually wise words.
Especially virtual relationships where you've never really even met the person and you think you know them, and they can disappear overnight like a call or a put.
Exactly. And since Stelios mentioned, just to say that the previous peak here, and we're talking about a few days ago, was at 16 and something.
Yeah,
so
into the election,
Exactly. Keep in mind that a move from 9.6, 9.7 to 16, it 40%. Might not. It's a move higher that's extremely significant. I mean, if you zoom out in the chart, you might say, oh, come on, that's nothing. Is it? I mean, if you buy at 9.7 and it goes to 16, right? It means that even if it doesn't go to 16, actually, it means that it might.
I look at this chart, Steve, and you know, okay, so it is realistic for it to be at 16 because it was only there a few weeks ago. And
exactly.
A 16 VIX is not an expensive VIX. But I look at your blue channel line, and we get up to 16 next time, we're breaking out.
It's a test. You're right. Next time we do that, we are actually testing this trend line. Exactly.
What great analysis, man. What a tag team.
So let's go to the Aussie. Aussie. somebody asked quite earlier actually, Aussie.
Yeah.
The good thing about
Maybe
Aussie is
Pedro.
that it's extremely technical, extremely technical. I mean, you have specific zones. Look at it. Look where we rebounded off today. I have these zones drawn since, I don't even remember how long ago. So look at it. We came here, we tested, we retested, we retested. I remember that we were on the webinar and Blake was talking, and I actually told him that, Blake, it was this candlestick. We seem to be breaking down. And he said, yes, we are, but I wouldn't want to buy, I wouldn't want to sell into weakness. I would want to see a rebound to sell. And we actually got a rebound, which came perfectly from the resistance trend line. And then, boom, that's it. Next time we tested the same confluence of supports here, the 50 fib and this trend line, we broke lower. We then tested 61.8. That was enough to hold us in place for 2 days. Third day we tested it, boom. Today we're testing this horizontal zone. Initially, we're seeing a reaction of it. Will it hold? We'll see. But even if it does, as you see, a rebound to the previous support at 74.50 or worst case scenario.
Yeah, Gregor will look for an ABC to lay into it.
Exactly. So even if you see a rebound, I don't expect it to be long-lived. I expect it actually to be short-lived. So obviously selling Aussie down there makes no sense. But if you missed this little rebound and selling here, I think you'll probably get another opportunity rather soon.
Hardianto, I agree with you. The Aussie and Kiwi, Aussie yen, Kiwi yen, you know, I still think they have new lows coming. You know, the rally might extend with yen strength and this pop in Aussie and Kiwi, but I think Kiwi yen could still trade 85.
You remember how long ago we drew that?
Yeah.
Dale, when we were actually breaking out, you remember?
Right.
That
Yeah.
we said that we might even tag that zone. This is still true, but look at it. I mean, I don't even need to move to a lower time frame.
Right.
I bet you that if we move to a lower time frame, you also have the potential currently of a head and shoulders formation here above the support. Do you see it?
Yeah.
I bet that if you move to a 4-hour time frame, you'll see a head and shoulders possible formation here with the neckline being exactly this support zone. So if you really want to be short already, you also have a formation to look into, which is a head and shoulders here.
That's
on the other hand, Kiwi yen is approaching a first zone of interest. It has already broken and established itself above the 200 EMA. We tested it several times here, here, and here and got rejected. And actually, we now penetrated through it. Obviously, it looks more bullish, and this is because people keep asking and they keep telling me the same thing.
You're right.
Yeah, because we have a breakdown in Aussie, Kiwi. Now, this is obviously troubling, but on the other hand, I still see an impulsive move higher, and the possibility of a three-wave lower is still intact. So would I go outright bearish on it? Not by any chance. If I wanted to be involved with it, which I'm not anymore since some time ago, I would be looking to buy still and not to sell, especially after the sell-off we currently have, because a lot of people have started panicking on it. But you know what it is. I've told you plenty of times. I'm watching so many markets. If something is not, ideal for me, I just bypass it and go look at something else. I think that's the best thing you can do. Now, on the other hand, Kiwi has a more complex pattern here, obviously. I mean, we made several efforts of breaking down below this support zone, but we're chopping around here. So, I mean, usually these kind of consolidations are resolved to the downside, usually. But given the fact that many people thought we were falsely breaking below, I also thought of it, actually. I mean, when I saw the first move, I thought, okay, that's it, Kiwi is gone. But then we snapped back immediately. Given this, I'd rather just wait and see it being played out. But I think that if we see another move lower, I think that's going to be the real deal. So I don't think we will be able to sustain another strong move to the downside towards the previous weeks down here.
65, 67. Yeah.
If we break down, I mean,
That's a huge formation, huge formation.
If we break down, things look really bad.
Like 64.
First target, I think, would be 66.70.
Yeah.
First target.
Yeah. I think there was some guy at the Sohn conference I saw on CNBC that is a New Zealander, a Kiwi, and he's recommending shorting it. He's saying the problem in New Zealand is, you know, their big industries, dairy. That's why people watch the milk auctions.
Yes, of course.
That these dairy farmers are having a debt crisis. They're so heavily in debt and what they're getting for their milk. So there's a, you know, one of their major industries is going through like a housing crisis, only it's a cow crisis right now. They have, you know, they've leveraged their cows. And, you know, I don't know at what rate. They've leveraged the cows, and the milk keeps going lower, and their currency keeps going lower, and people are drinking lactate-free milk because they get gas from milk or indigestion. How about you guys? Can you digest milk pretty good? Milk is for babies, right?
I can, but I'm not a big fan. I'm not a fan.
Actually, gastroenterologists, the more time passes, the vast majority of them agrees that dairy products are by far, you know, the best thing. I mean, no, actually the opposite, are not good for humans. I mean, best case scenario, you are okay with them, but it's proven that actually we humans are not created to eat and digest so many of them. So actually the vast majority of them, and as time passes, you know, try to tell you that, you know, you should probably abstain, or anyhow, you know, have a very limited usage of them. By the way, this is silver because somebody asked again. I'll say that I really like the fact that you don't count this day, because this was actually due to the Sunday being included. That was a down day as well. It's Monday, but it includes Sunday and Monday. So we've actually, with today's candle so far, we've had 16 out of the past 17 days lower. You remember, Dale, yesterday we were somewhere here, like flat on the day, and I told you that I might be long already, but I consider it most probable 80% that we are going to move lower still, because this was looking like a very short-term consolidation, and indeed we're doing so. I'm looking forward to seeing it, you know, to 1595 to 1580 zone. I think there is money to be made here. At least that's my personal view, and my second bullet is going to go in right here and then at the channel. I think that this move is completely overblown, and at some point it's going to snap back, you know, in a spectacular way, at least for a $1 correction, at least.
You guys looking forward to hearing Chris today?
Oh, I'm totally looking forward to hear Chris. We're always having very, very nice and productive debates. We've talked in the past on Blake's show as well, and Chris is one of the great guys. First of all, he's a guy that you know, considers himself mostly a scalper, but he has an outstanding and amazing long-term view of the markets. I mean, you very rarely find that. Yeah.
Yeah, he said, I tweeted that he starts with a telescope.
Yeah, exactly. Now, having to do with Euro Yen, there is absolutely no change. Buying strength here makes no sense. I would love to buy a retracement back to 122.50, 121.50, a retest of this, but buying here makes no sense. I mean, it can go, you never know, it can go parabolic. But how would you excuse yourself for entering the trade at this exact point?
Yeah, Chris wants to talk about the monthly of Euro Yen today. He tweeted that.
I'm really looking forward to it.
Pretty bullish view. Yeah.
Yeah, I'm very bullish as well. I mean, I told you, we broke the descending channel which confined us for such a long period of time, and after breaking above it we had a textbook correction, the retest of the channel, and then an amazing thrust higher. I mean, the strength of this, there is nobody that can doubt that this move is impulsive. I mean, by nature, by technical nature, you never know what can happen, but you know, from a statistics perspective, I mean, seeing this kind of a move and being like a false move, I don't consider it a high probability. So I'm looking forward to buying weakness, really looking forward.
I mean,
I really want to get involved with that.
From 115 to that channel, it got there in a hurry. It was the most directional move on your chart.
Oh yes, yes. And you remember, Dale, we talked a long time ago, and we had one of those lovely debates we have with Stelios here. I'm a believer of the euro. I think too much pessimism is being priced in Europe, and I think that the next move for the euro complex in general, you remember we've been saying that since a long time ago, a month ago, we were more than that, I believe is higher.
Yes. You're a euro bull. No reason. Yeah,
I'm not convinced yet, but yeah, I see Steve's point.
Yeah, well, you know, it could just be a function just to shake out every last bear, Stelios. You know, maybe you know, rally back towards that 115, 117 high, and then people will give up on parity, and then we get parity in a heartbeat.
I also made Stelios happy today, telling him that we had an equality of legs here in EuroNOK, in his beloved EuroNOK, and we actually had an amazing turnaround here. So EuroNOK seems to want to correct lower. So if anybody wants to be long again, perhaps you'll get better prices to do it. Or if you believe that that was a blow off, you know, and you know, it's going to resume lower towards this long-term trend line, then it's also an opportunity, because the short-term signals show that this thing might be turning lower for now. This is a very, very, very strong candle to ignore. So probably a retracement is a good opportunity to be short again for at least one more leg lower, perhaps to this high of 99.36 or so.
Mm-hmm.
I just see Gregor saying that he wants to say something. Sorry, Gregor, you should have spoken, mate. I just saw it.
Yes.
Gregor?
Hey guys, how are you? So
Hey,
we have a guest later, right?
Yeah, you have time.
I have time. Okay, I have 8 minutes. My charts
Okay,
are
I just gave you the screen, Gregor.
Yes, sure.
Sorry,
So,
you should have spoken, mate. You know, I couldn't see all screens at the same time.
You need more screens.
No, actually, the more I have, the less I can pay attention to all of them.
That's true as well, yes. Okay, so I will try to be very quick here. Actually, I will take a look on dollar index and euro dollar. I just think that we have seen some very nice reversals. So I have actually...
And ABC on DXY, right, Gregor? I see an ABC on DXY.
We have seen a very nice drop here from start of the year, actually. And this recent bounce appears to be very impulsive. I have here an intraday count. Clearly, you can count here 5 waves rally. Now, dollar index appears to be much stronger and with much better impulsive shape than compared to euro dollar to the downside. Okay, so I will show you the euro dollar chart where we have seen some overlaps in the recent intraday decline. So for those who are familiar with Elliott wave technique, will know that there should be no overlaps if you are tracking impulsive decline, okay? But still, if you think the dollar index is headed higher, then euro dollar obviously should be headed lower, okay? So actually,
from an Elliott wave perspective, do you also believe, to see if we coincide in this, that USD-CHF might be a better opportunity to play the euro weakness?
No, actually what I want to highlight is, I just want to give a little bit of educational background here. So on euro dollar, what I want to say that in euro dollar, if you change to this bar chart, you can see that we had some overlaps here in the middle of this recent decline. Actually, it was yesterday. okay? But actually, sometimes when the price action on the bar chart is not so clear, what I do is switch it to a line chart, okay? And if you take a look on the line chart, now you can clearly count 5 waves drop without overlaps, okay? So now if you compare a line chart, which will ignore any noise, intraday spikes, and then you can actually see that this is matching very nicely with dollar index view, okay, where we don't have overlaps, not even on a bar chart. So I think that if anyone has been tracking only euro dollar, then this is actually confirmation that dollar index has 5 waves down, that even euro dollar should be counted in impulsive 5 waves drop, okay? I just really hope this was not too complicated. So the
Grega, someone is asking, sorry, but somebody wants me to ask you, Steve, can you ask Grega that where he got that arrow line in MT4 toolkit? Somebody asked.
Arrow line?
Yeah, I don't know. I think he means that you create arrows instead of simple lines.
Not where, on euro dollar, on dollar index?
Your blue arrow, for example, I think he means.
I guess this is 3 lines that he's made, a big one and 2 small ones.
That's what I'm
right?
guessing, but perhaps.
He wants to know the tool. It's not the tool. It's not the tool. It's the craftsman.
Yeah.
What do you think, Grega?
Yes, probably. I think that's the case. Yes. So actually, we have what, 5 minutes left. So actually, from euro dollar bearish view and dollar index bullish view, okay, what I want to also to highlight, now we will move to a little bit to a trading plan, what I'm tracking for myself. So actually, I was also watching dollar CAD because crude oil, as you know, turned sharply as well over the last few days. So actually, here I have daily chart of dollar CAD, and I have seen that market rallied very correctively into some short-term FIB resistance levels here near the upper channel resistance line. And I also see crude oil that has more upside available, which means the dollar CAD could face limited upside here. In other words, Canadian dollar could see some move to the downside, maybe in a pullback, maybe in impulsive sell-off. So if dollar CAD will really reverse to the downside, or at least see limited upside based on a crude oil bounce, and if euro dollar will continue down because we have 5 waves drop, then maybe euro CAD could be a very good choice. So I reviewed after seeing this chart, I went to euro CAD, and I also see some interesting structure there. Clearly we have 5 waves rally to the upside. Okay, wave 1, actually from April lows. We had previously ABC decline, clearly corrective move, broken channel, which confirmed that we are headed higher. We have A1, 2, extended wave 3, 5, and then you have another 5 wave rally for wave 5, and ending diagonal here in these latest stages, which was turned to be completed with a throw over formation. So which means that here was a short-term mania cycle. Everyone thought that market will continue to the upside, and when market falls back into this, this trend line, it was a fake breakout, and now I think that we are headed lower. Okay, so possibly we have a top of a 5 wave rally here in place. So from minimum perspective, I think that we should go lower with at least 3 wave decline. Okay, either in ABC, and we will then continue higher again, or maybe with 1, 2, 3, 4, 5, like an impulsive sell-off. But for short term, for traders, I think that this ABC decline could be enough to make money on the downside. So as we said, euro dollar, we have 5 waves fall. Dollar index, we have 5 waves up. We have dollar CAD, which could see limited upside because crude oil bounced to the upside. And so I like, as I said, euro CAD, and also it has a 5 waves decline here on an intraday chart. 1, 2, 3, 4, 5 for wave 3, wave 4, and then you have wave 5, and now ideally you have a 3 wave corrective bounce unfolding, which means I would watch for resistance around 1.5040, maybe 10 pips higher, around there. That would be my zone. So that
I give you the dream team. The dream team. Thank you, Greg. Great stuff, man.
Yes, no problem. I will always, will be my pleasure to share these views, but those...
Yeah, and I like the way you showed that throw over in that formation, and then once it got back inside it, that was your go signal.
Yes, it's a lot of tracking, a lot of watching for you to spot something like this, and to make maybe a trend plan for someone.
How many hours a day do you do analysis?
Actually, this will not come from you. You cannot come in front of your computer or screen and say, I will do a trade plan today. I'm watching tracking markets.
Right.
I was spotting and tracking EuroCAD already last week, obviously. Okay, but everything came together in the last 24 hours.
Right.
So.
Okay.
By the way, since Greg mentioned the EuroCAD, I have to say that we are preparing a blog post about the Euro crosses post-French elections, which is going to be live at some point, most probably today, worst case scenario by this time tomorrow. So people can check on our blog post and they'll find that there within the next 24 hours. I think it's going to be very interesting. We're going to follow what we like to follow, the multiple analysis approach. So we're going to give a point of view from a macro perspective, from a basic technical analysis perspective, from harmonics perspective, from Elliott wave perspective, and usually, you know, those become very well-read blog posts. So
sounds like www.forexanalytix.com.
Indeed. So let's get Chris on. I'm really excited.
How about giving me 5 minutes?
Okay, sure.
All right, so pull your jets, everybody. I'll be back in 5, and I already have Chris identified in the room. I have my NSA people. They're following you, even in South America, Chris. I'll be back in 3 minutes and give you the mic and the screen. Stand by for Chris Baer.
Greg, are you still here, mate?
Yes.
Okay, let me ask you something. Do you now have an account for Euro-Aussie, since we are talking about the Europe crosses?
No, actually, I did not.
You still have one for the Euro-Kiwi, though, right?
Euro-Aussie, I have been looking at 4-hour chart. I have only 4-hour chart. What I see is a 5-wave rally from short term. I'm talking only about the short term cycle. 5-wave rally from April 17 low. So I think that we could face some limited upside. Also, there is 1.5 round figure, so it could be some psychological level, and I would expect a 3-wave setback before market may resume to the upside.
I agree with you. So a buying opportunity, for example, I see several peaks and bottoms at 146. That's what I'm looking. For example, 146 in Euro-Aussie, yes.
Yes, 146.50.
Why don't you actually show your screen instead of having until he's back? I'm going to give you the screen again. There you go.
Okay, so actually it's 146.50.
Okay.
146.50 and then 144.630. 144.30. That would be way forward. Just a second. Someone calls me. It's my wife, so I definitely have to make an answer. Okay.
Oh yeah, absolutely.
Because I see that she has to pick up kids, and it's already 4 p.m. here.
Sure thing. I'm gonna show the people what I see in Euro-Aussie. Obviously, we've already said that this was a nice move and the break higher, and I think that here we have a peak. Here it used to be support. Here we had what was the end of wave 3 in the short-term count that Greg showed from this bottom here. So I think that a pullback somewhere here, or worst case scenario here at 144.40, I think it's going to be a good opportunity to align with the trend. Something equivalent with Euro Kiwi as well. But you can see all that in the blog post we're going to upload within the next 24 hours, as I said. So let's wait for Dale and get Chris on the show.
Hello?
Hey.
Check, 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 check.
Hey, Chris, we can hear you.
Hey, how are you doing?
How have you been, mate? Nice to hear your voice again.
Yeah, very good. How you doing, Steve?
Good, mate. Good. Excellent.
Hey, it's Chris Bear.
Who's that, Blake? Hey.
Yeah. Yep. What's going on?
Blake?
How you doing?
How are you, friend?
Man,
Very
it's
good,
been a long time. Been a long time.
Yeah, been a while. And how's everything doing? Good?
Everything's good. How's the progress with your property? It looks awesome.
Oh yeah, thanks. Been a labor of love. Yeah, you know, the details are really what get you, and you know, you just got to put the time in. There's just no way around it.
Yeah, the 24 karat gold fixtures in your toilet, I'm sure took a long time to pick out.
You know, actually, it's nothing gold here at all. It's all stone and wood, and trying to keep the rain out, because then you have to adjust for when it rains and it gets windy, because we're close to the ocean here. Not on the ocean, but close to the ocean. So
right.
On the other side of the hill, we get the wind from the ocean, and so you know, everything you built, you have to adjust for the rain effect. But everything's good. Great to hear your voice. Great to hear this new setup, and I'm really proud of you and really happy for you guys. Sounds wonderful.
Well, thank you very much. We've got a great team, and Dale should probably be back by now because he's our hostess with the mostest right now.
Okay, great. So,
I'm here listening to you guys. Hi, how are you, Chris? I don't know about the rest of the guys, but I'm sure looking forward to the housewarming party that you're going to throw. I think we should all be down there on the beach having a cold one day.
All you guys are big talk, but no action. The standing invitation is open.
All right. So what do you think about the team? The team that these guys assembled. Pretty good team, good crew.
Yeah, it's wonderful. I believe I know everyone. Over the years, I think you know, it's funny that the FX community is small and large at the same time. It's small in the way that you kind of attract to people that you vibe with, and it's large in that you kind of shut out people that you don't really mesh with. So I think most of the people here I've known for a long time, and I consider it long, more than 5 years. And yeah, I just had the pleasure of listening to the.
It's fun to work with friends. It's fun to work with friends, don't you think?
Yeah.
Instead of having a boss.
Yeah, and hopefully I'm not going to ruffle any feathers with my point of view today. I'm going to say this, that in my experience, you need to find what works for you and what works with your personality. Now I heard Steve mention that Chris.
Well, you know, Chris, that's exactly what Jack Schwager said to me in an interview. I said, Jack, I said, what's the most important advice you could give a trader? He said, find a style that fits your personality. So
yeah, and I didn't know it through him. I actually learned it through the hard way of, you know, just failing using other people's analysis or style or methodologies or just ideas.
Yeah.
And Steve had mentioned that I'm a scalper, and I'd like to talk a little bit about that because
great.
I'm not actually a scalper in the way that most people would define it, and I'd like to discuss. Here's what I'm here to do. I'm here to sell you guys on a method, an idea, open-minded. Not I have no classes. I have no blog, no briefing room. I'm not selling anything other than a point of view and an idea that may contribute to your ability to see the market more clearly. And so,
I therefore nominate you for the Nobel Peace Prize Award for humanitarianism.
Yeah, well, I do it because I've been fairly lucky, not because I'm doing it for humanitarian. I want to give back a little.
Yeah, I always knew you had a giving spirit, Chris. So, you know, we're open, respect what you've done in the past, and really appreciate that you would take time out of your day and away from constructing your dream home to actually care. And so we're going to be watching and asking questions with an open mind, and I know that our community is excited and really they've been looking forward to hearing you. So why don't you just take it away anywhere you want to go, buddy. I can talk about anything. So go ahead.
Dale, let me ask you, can you see my screen?
Yeah, we've got it up there. You've got 15-minute euro yen, 1 hour. Looks like you're breaking down different time frames here.
Right. Okay, so what I'd like to do, I'm going to start with this chart. And this was a chart that I did months ago, okay, literally months ago. And as the chart goes, you build it. This is Euro JPY monthly. And as I start to notice that the down starts to lose its power and then starts to move across, it starts to tell me that I can start to look for opportunities to trade both ways. And now trading both ways for me, okay, so in that section there, I can trade both ways, and I can say to myself, hey, you know, listen, I'm going to short certain levels at the highs and get long certain levels at the lows.
So you're range trading in the blue box.
Yeah, when I see this kind of price action start to occur. And what is this price action? A big down that smoked everybody, and followed by an across candle that says, hey, listen, these candles talk to me, and this candle says to me, hey, listen, I don't know what I am. I don't know if I'm a bear or a bull, but let's find out. And this says, well, listen, I'm trying to go further down, but I can't, and I closed up here. But in relation to these other two candles, this is not the monster bull candle. So as I watch this, I see that there's an opportunity to trade in consolidation. Then what happens? Okay, I'm guessing, but I'm probably stopped out here on my 240, somewhere in here. Okay, what happens? There's a break up, and I'm stopped out, and there's this big, long bull candle. Now, I could very well be stopped out on my short and still long from here, from down here. So, because if I've been range trading, if I'm trading from this side and this side, I could have two positions on at one time and be thinking, hey, listen, I'm not a magician. I don't know, because you know a lot of people write to you, hey, Chris, well, Brazil, how do you know? You seem to know, and I just have to say it over and over again. I don't know. What I do is use the charts and use the candles, levels, and trend lines to give me a
roadmap,
an edge. Yeah, a roadmap and an edge. And I'm going to say something further. I don't know, and I don't think anybody knows. But we can, as you get good at it, as you spend some time doing this, you can get to the point where you can put the odds into your favor. And I want to talk something else about analysis. I believe most FX analysis leads to paralysis, because you could make a case for all sides and well, I think it's long end, but it's oversold, but it's overbought. So the EJ right now, it's overbought because it shouldn't be keep going, but it's still going. And you find yourself in those kinds of things.
Yeah, that's CNBC analysis, Chris. Right now you'd put this chart up on CNBC and they'd say, we're on the verge of a breakout unless it fails, but if the failure finds support lower and breaks out, you should go long unless it's negated again.
Right.
All right.
So look, but there is one analysis that I like, and that's using the monthly. Yeah, because you mentioned using a telescope and starting inward.
Right.
When this trend line, which is a serious trend line, this is a monthly trend line. When a monthly trend line gets broken, you have to respect that. And if you understand what happened here, this took a lot of energy and a lot of power to break up through here, and it closed here, right near the trend line. And then as it closed here, the next candle opened and came down and tested, which is very healthy, okay? Yeah. And it said, hey, listen, I'm going to try to go down, and it couldn't, and it closed higher. And then, you know, each one of these is a month, so this is a month's worth of price action, okay? Right. Battling it out. And it's telling you, listen, when this created this, okay, I put some charts up. I share charts a lot. And I said, listen, this is going down, okay? And it did. It came down into here. And then when it hit here, I said, look, this is going up. And when it's going to go up, it's going to go up here. Now, that's analysis, and that's all well and good. How do you trade it? So that's what I'm going to get to this chart here. And this is just a clean 240 from the low. Okay? And so once I have my idea that, hey, listen, this is going to break up, okay? And this, okay, so here at this level, this is where it tested the back of the trend line and just started to go up. So if I'm looking for longs, okay, most people are going to say, listen, I'm worried about once I get in, I can't get back. Once I get out, once I take some profits, I can't get back in. Well, there's a money management methodology so that you could get long in here, okay, and take half off when it comes up into this blue line. And you can use whatever moving average you want to use. You could use a 20, a 5, an 8, whichever works for you the best. I like to use this AMA, the adaptive moving average. Okay, and so when it gets up in here, okay, and I'm already long here, I take half off and I put my stop to break even, and what do I actually do? I look for a new entry. So this is ends up becoming part of a managed entry, a managed trade, and I just forget about it unless it comes out and takes us out. Now, as it goes further higher, of course, I move this stop. So I bring that stop. So what happens here? I'm looking for an entry. And what's really cool about this is that I work on each 240 candle. And my whole methodology is that I don't chase running. So if you look at this part here, this part is running. Okay, these three candles run. I'm not interested in these three. Now, a lot of Mo players and people normally are going to look at me like I'm nuts. You missed all that. Okay, listen, that's a style, and it's not my style. I didn't get an entry, all right? And I'm looking to control my risk for my next entry. This previous entry here, okay, it's already in the bank. I don't consider that a trade. That's just, okay, whatever happens. If I get lucky and my analysis is correct and it goes way up to here, great, I'm lucky. But, you know, that's all that is. I have no idea what the Bank of Japan is going to do. I have no idea what Trump is going to do. I have no idea what the ECB is going to do. I literally know that. And contrary to my tweets and my bravado in tweets, I am not an arrogant guy when it comes to the market. I know it's sort of like the ocean. You know, you can be on a 60-foot yacht and, you know, you're a speck. Right. So that's how I feel.
It's a healthy respect of knowing that, you know, a rogue wave can come at any time.
Exactly, Dale. It's just for fun to say to write the stuff I write on Twitter, and it's kidding around. So what am I constantly doing? I'm looking for levels that allow me to enter, okay, with a decent stop loss, and I'm looking to get those entries, okay, based on the previous candle. So a lot of this in here, I might have been short, okay, and then I might have gotten long here and got stopped out, all right, and then it went to there. So I might have had from here to here an additional 5 trades, 6 trades, okay? And each one of them, I'm looking for longs and shorts. However, because I have this idea that it's a long, my shorts are targeted so that I'm looking to get 20 pips, 25 pips. And my longs are targeted to be extend further. So my longs
so
probably...
that's a pearl. So that's a pearl. When you're looking for counter trend trades, your objectives are much smaller because you have that bias and believe it's right.
Yeah, yes. And
Okay.
and what ends up happening is that now let's go back to my original charts. What ends up happening is, because I'm looking at this on multiple time frames, okay, so this is actually what I trade from. This is actually it. This is a daily here, okay, Euro JPY daily. This is a 240, okay, Euro JPY 240. This is the 60 and the 15. This is actually what I trade from, okay, and nothing more complicated than this. And if you go back to that monthly, if you have this as a retrace, so this is your big A, and this is your big B, okay, your retrace, if you're going to get a normal retrace, is going to be up here at 124.82.
Right.
Okay, so 124.82, and look, I'm a big believer that the monthly guides the weekly, which guides the daily. So this chart, this candle here, has much more meaning than, let's say, a bullish daily candle, like this candle. Okay, that monthly candle to me has a lot more meaning. So,
you know, wasn't that monthly candle, Chris, actually have more meaning because you already had an established low and it was a reversal candle, unlike the original bottom that bottomed on a dark candle and moved sideways and up? Wasn't that really that candle right there is the best looking candle on the chart since it bottomed?
You know, absolutely correct, in my viewpoint also. And so what do? I look for levels, candles, and candlestick patterns, and trend lines. So and that's it. It's simple. And now listen, I know Blake uses fibs, and a lot of people use fibs, and I respect that, but I'm not a big fib guy. And you say, but what the hell are you talking about? Every chart you put up is fibs. Well, I use them to measure, but I'm not trading. I'm not taking trades or fibs. I'm taking the fib that I see that's clear to me, because also, if you ever noticed a lot of Blake's work or other people's work, they'll have clusters of fibs from different and multiple charts. Yeah, multiple charts and multiple time frames, and that's where it lost me, because I have the patience and the attention span of a gnat, so I just can't do that many time frames and keep going back to that. It just drives me crazy. So I just kind of use them on the bigger time frames, and I try to lay them out with the candles so that it kind of makes sense. So this candle was a danger. It's going. It was like a big sign.
You're digging yourself. You're doing Will Robinson's robot.
Yeah.
You're
a big siren. Yeah, a big siren. I'm an old guy. I got a young girlfriend.
We know why you're in Brazil. Go ahead.
So anyway, I believe the target here is the 382, and I believe that if you've done the work, okay, you're the 124.80. It says 82 here, but 124.80 looks like it could be the target. So, and what does the market like to do? If you've noticed what the market likes to do, okay, it likes to take out levels and then retrace. So I would expect the retrace to be somewhere in here, okay, and so it'll take out this level, and then retrace. So I would expect the retrace to be somewhere in here, okay, and so it'll take out this level, this candle here, okay, that candle, all right, so it's going to take out that high, and it's going to fail these unless some kind of news comes out, because this is what I call a chunk of traffic right here. This is a chunk of traffic, and it's going to be...
So you call supply traffic. Right.
Yeah, this is like a floor, right? It's going through levels. So for it to get through this chunk of traffic, these three big candles, okay, it's going to have some indecision and some apprehension, okay, unless there's some kind of driving news. Right now, this is as technical can be. There's nothing driving this. There's nothing more than the technicals are driving it, and I think there's 3 or 4 things that drive FX, and that's it. I don't make it a really deep and meaningful discussion. Now, however, it doesn't mean I'm not aware of it. I listen to a guy like Mark Chandler with a tremendous amount of respect and understanding, because he's covering probably 25, 30 markets. He's deeply informed, and he's just built up a repertoire of knowledge that you have to understand. By the time we get that knowledge, it's secondhand news. Okay, that means that secondhand news is already acted upon.
Yeah.
Okay.
True.
So I'm just not sure how I can use it other than as an understanding of what's going on with the market. Okay. So going back to this, I try to trust my charts. So here's my 60 chart, and if I had a long bias, let me show you all the candles that give me opportunities. There's a long. There's a long. Okay, so listen, buy it. The next candle, it closes, test down, buy it, set your stop, and forget it. And look, you're going to be right. You're going to be wrong. Now go back to what simple cash management and simple risk-reward concepts, and you should be able to nail this move and not worry about entry, so that you're able to, look, get long, okay, you're crazy, get short, you got paid and you still were wrong, you got paid here and you still were wrong, okay? There's a lot of ways to play this game, and what I'm suggesting, if you're a manual trader like I am, okay, here's one. Get short, you get paid, and unless you took your profit right away, where going back to my original idea, you didn't get paid, because there you go. You
were only looking for 20, even though it gave you 50.
Yeah, well, yeah, whatever it happened to be. All I'm saying is, when you're dealing with a squirrely kind of pair like the Euro JPY, you just need to know how it trades. Now that leads me back to something else. And again, I'm not knocking what anybody else does. I just want to give an idea. Let's just say that you're a beginner, 2 years or less trader. Okay. In my opinion, from the many students that I've had in the past, I would suggest that you focus on 1 or 2 pairs or one product like a Wittick or whatever it is, and you put your focus on what that does and why. Now the whys are always going to happen afterwards. You're going to understand why after the price moves, because you're just not fast enough. Okay, your news feed is not fast enough. Okay, it already dropped. And then when the why comes, then you can say, hey, listen, that's a meaningful why, and this is going to extend, or this is a meaningless why, and I think that's just a retrace. So if you focus on 1 or 2 pairs, you can become an expert in what that pair does on each 15-minute, each 60-minute candle. I highlighted today's Euro JPY 240 close because it was very funny. It was breaking down, and it went all the way down about about 15 pips, and then the last minute it went back up and closed as a bull candle. Okay. Now, if you're not aware of what the Euro JPY does, that's what it does.
Great presentation, Chris.
So I just want to talk one little bit more, and then we'll take some questions if you want.
Okay.
I just want to talk about this oil weekly. Okay.
Fine. I
I don't know where people get that this is bullish. I don't get it. I don't see. I love you, but I just don't see how you're getting anything from this chart that you say this is the clean out. This candle. This candle here is the clean out. My ass. Excuse my language, but are you kidding? That is a bear candle. That is a bear candle set up to look like a bullish candle with this stick. But understand when this occurred.
It's got a wick and a dark body.
Okay.
A wick and a dark body.
It's all body, and it's bearish. This is a bear candle. Okay. There is nothing to indicate that this.
Steve Volge
this retrace is over.
Our candlestick guy, Steve Volge.
He's right.
I guess he would agree with me, but this is my interpretation of it. It's just again, it can fool people, and you hear all this stuff. It's time to get bullish, and the fundamentals, and listen, I have no clue about the fundamentals of oil. I have no clue. All my news is first.
It's black.
Not first.
It's black, Chris.
It's second hand, third hand, and fourth hand news. My news is so deep in the woods. I'm a know-nothing. So I can only go by the information that's in the candle. And if the information is in the candle, this weekly is not bullish. Now, did it become oversold? Is 45 a price point that they're trying to defend? Blah, 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 blah. Yes.
Yeah.
But I do not see this as a bullish, in fact, if you turn this upside down, everybody would be all sorts of get out bullish that this is going to here. So if you turn this chart upside down. So anyway, I just wanted to add that little bit, and then now I know I talked.
What a great interview and a great look. And really, and sharing your methodology and you make it seem like, for many, that it seems so difficult that, you can't learn experience. It takes time, Chris. I mean, you talk about newer traders and they're not quick enough. How many years would you say it took you before you became consistent in pulling money out of the market?
I'm going to say 4 years.
Okay, so it's like going to a university. You went to college for 4 years. So
I had my wins, but I got to tell you, what would happen is that you do 50 good trades and 18 months of great trading, and then you blow up. You blow up with that one trade where you just didn't. And then you're hoping for it to come back, and then you're hoping for it to come back, and no, just when it retraces, I know I'm gonna, you tell yourself that story.
Say that, yeah. Okay, so 4 years, I ask you that to give people realistic expectations. So, for a college degree, it takes 4 years. Even if you want to be an electrician or a plumber, you're an apprentice, then you're a journeyman. It's a process. You can't learn it. It only happens with the passing of time. In our business, that time is screen time. So,
right.
Great coaching session today, buddy.
And you can excel that time. You've got a lot of young guys out there that are just monsters. I mean, these guys learn at an exponential rate. I'm going to just say that I'm slower or older. I believe a lot of these younger guys and younger gals, some great women traders. Women traders are great too because they actually listen. I love women traders. Anyway, any questions or anything?
We know what you love, man.
I've seen you track it, and there's a friend asking for it. Your view for USD CAD.
Oh yeah, okay. one second. So listen, if you guys have followed my trading, you've seen the charts that I put up. Is the love you long time trade, and my contention was that this. Let me fix this. Let me just take this out so we can just see chart. Get rid of this so we can just see chart. So I believe that this, we have such speed in the market today that this was all the known information drove this quickly high, and it couldn't go any higher, and that we've made a generational high unless oil goes back down
The 35.
The 30s again, and if oil goes back down into the 30s, this is going to drive to here. And if you followed any of Mark Chandler's work, you'll know that the other thing that drives the U.S. CAD is the interest rate differential on the 2-year. So you really got to follow. The CAD is a tricky trader, except if you don't listen to the chart. So look, when I saw this, I said it's going higher, and there's a good friend of mine listening right now. He knows this trade because we talked about it about a few weeks ago, and I said, look, I don't know about you, but I'm looking to get long. It's going higher, and it's going to take these out. Now, then if you look at this and you say, hey, wait a second, how high is high? Well, 618, 138.32. So, and then you have your little steeple here. So right now, I haven't seen anything. There was a little bit of a murmur on the daily, but so let's go back to the daily now because we've got those levels, and you had this one daily candle. All right. And that corresponded with the big buy on Friday of all the oil shorts covering. Yeah. Right. So look, you have to reconstruct what happened. You think suddenly Friday a whole bunch of guys said, you know what, oil's such a bargain here at 45, 43. Oh man, I gotta buy it. No, it's a whole bunch of guys coined, bank. Okay, it's time to cash out. I'm gonna. And those guys are shorter-term, shorter-minded traders. And so that's what created this candle, not any sort of buying spree. And now, again, that's my opinion.
Well, I don't know. I heard differently. I heard it came across Reuters that Steve Volge shorted it 10 pips from the top, and the whole world moved on. You didn't hear that story? It was on Reuters.
I actually, I don't follow Reuters, but they're smart to have Steve on there.
I dated myself. No one follows Reuters anymore. Okay. Chris, I trade with I have a ticker tape under this glass thing. You ever see those? That's what I use.
Oh, yeah. Oh, that's good.
Chris, it was great having you, man. I'm telling you, you're a great person that adds to the Twitter family of FX traders. I respect you and your work, and I think it's so cool that you're, living your dream, went down to Brazil, building your own home, and that you take the time to try and show people the way and pay it forward. And I want to thank you for taking time to edify our community today. We all really appreciate it. Everyone give Steve Bear at Brazil 61 your thank you. And perhaps we could do this again down the line, buddy.
Yeah, I'm always available unless I'm traveling, but great. It was really good. And Dale, I'm glad to see you staying strong and still fighting. Thank you so much, Chris.
And may the pips continue to rain down on you, and your house be completed, and you're a blessing to others. So I hope that you're blessed as well. So Thank you very much.
And Chris, I just want to say thank you as well. I know I didn't get a chance to talk. I listened the whole time, but I didn't want to interrupt. And I just want to say it's great to have you here. And it's hopefully the next time you're on, we'll be able to communicate a little bit more.
Yeah. Okay. Great. Great, Blake. And thanks so much, and lots of luck. And really great. Really great. Okay.
And so Blake will send you a ForexAnalytix T-shirt for you to wear on the beach, buddy. All right.
Yeah, I want that. I want that T-shirt for the best training station. If only I could know how to fill out the forms, I would have did it.
Oh. Thank you, buddy. Thank you, buddy.
Bye bye.
Thank you.
Hey, thank you, and thank you, Faith community, for your attention today. Thank you, Steve Volge, for another session of great analysis. I want to thank Grega for dropping in and within 10 minutes give you hours worth of analysis. EuroCAD, you're going to keep that on your radar. And want to thank Blake for coming in early. What a team. And wish I was down at Chris's house right now instead of Temecula, California. But remember, guys, most of all, don't just count your pips, count your blessings. You're our trading family and community, and I look forward to working with you guys again tomorrow. Thank you, Steve, Stelios, Nick, Blake, Rega. I miss anybody. Have a great afternoon. Go enjoy your life. I'll see you later.